Well, strap on your seatbelt, ladies and gentlemen, because the stock market is apparently heading into outer space. The Dow Jones was up 1,200 points. Everything across the board was just massively in the green. It's crazy how just a cooler than expected inflation number comes in and bam, that's what sends the market off roaring. And it's the same exact number that we had over here in February, but you can see right now we're feeling a lot better. It was its sixth biggest single day point gain in Dow Jones history and the largest single daily point gain in the NASDAQ and 14th all-time in percentage points. Now, yesterday we talked about the HYG, right? High yield, smart money coming into that lower range. It's crazy how much one day a difference can make. Look at this. We had Bitcoin at the lower range. We had XLY, which is consumer discretionary, things like Tesla, right, and Home Depot and stuff like that. And we had ARK, profitless tech companies towards the bottom of the range. And boom, take a look here. Everything is coming up into the red, other than a couple of assets that are quite important to track. And that right there is the 10-year yield and the dollar. You can see that the downside is now getting a little bit limited. Doesn't mean that this rally can't continue, but we're going to be hopping into looking at some various assets, some things that I saw that were very interesting, kind of gauge as to where this market might head. If we take a look at the 10-year yield, we broke through that little consolidation, obviously to the downside. Inflation's coming off. So you would think that if inflation's coming off, you think that, hey, inflation hedges, quote unquote, would not be doing good. Well, gold actually is one of those things, and gold shot off like a rocket ship. It's up 3%. So why would that be the case? Well, it's probably because the dollar got completely cracked. The dollar got cracked to the downside, and you can see the S&P 500 went up too alongside of it. Interestingly enough, when bonds go up, right, banks, think about banks. They borrow short-term, they lend long-term. So you would think that if the yields are coming down, that's not great for financials. But financials also rocketed up too, up 5%, full-blown correlation in the S&P 100. This is coming on the back of a yield curve, the 10-year in 3 months, which is now negative 46 basis points. Crazy. And the 10 and 2 is minus 52 basis points there too. So we're not out of the woods, people. It is what it is. This was a bear market rally. Does it have legs? We'll get into that. But as it stands right now, when you take a look, the important assets right here, the dollar and the 10-year yield, they came off. Because why? Well, they were above, right? So they were at the upper ranges of their zones, and now they're coming off. And now all the other assets, look at what it helped propel up. It's incredible how that works, but now you got to be aware of what's taking place. So if we take a look at the SPY on the 15-minute time frame, complete squeeze to the upside. It was wedging very tightly throughout the day, but then we got a little bit more of a blow-off move towards the end of the day. You have a negative divergence that's forming on the RSI. It's outside of its weekly expected move, completely blew through the CPI expected move. This was a massive move, and we're looking at $20 to the upside. That's crazy, right? It's at 394. Moves like this, they can get some follow through. That's, always a possibility, but this is not where I'd be entering in long. I'd be very careful right here and wait to see how it digests and just be patient, wait for things to settle out. If we take a look at the Qs, same situation, right? We gapped right to its upper weekly expected move, very exactly where we opened up. Actually, we opened up at the weekly expected move. So if we do come off hard and fast, by the way, look for this to potentially act as a flip, and that could potentially act as a level of support. We've seen that before. Now, overall, the Qs, right? People are calling for their melt up. They're celebrating so early and so soon. The Qs haven't even moved. We're just in a range, right? So if this is going to continue, we're going to have to break out of this zone and get some more pressure to the upside. But as it stands right now, we're once again, right, just like yesterday, we're moving towards the lower, getting a little bit frothy to the downside. Now we're frothy to the upside outside of that weekly expected move there too as well. Okay, so let's go ahead and take a look at the IWM. The IWM closed right at the weekly expected move, slightly above it with a negative divergence, and the PMO's coming off. So yep, we got overextended to the downside as we talked about, right, on the zones, and we saw some wedging activity. The CPI came in lower than expected, and we shot up. The market's looking for any rally, any reason to really rally right now. Now we're kind of wedging right here too as well. So just be careful, right? That's kind of just how the story goes right now. If you take a look at some indicators to give you more context, we talked about the growth versus value and how it's coming into this overextended territory, right? On the rate of change. Well, guess what? Well, things bounce from overextended territory, overextended ranges, right? If you take a look at advanced decline volume line, this right here is moving the RSI up into that overbought condition. The last times that happened was right here, and right here. What took place on the New York Stock Exchange when that happened, I have those highlighted right here, and right here, and right here currently. And you can see that this is coming into that trend line that we discussed just yesterday. X marks the spot right there. So are we going to get some follow through, get some continuation, or is it going to be some sort of a bull trap? It's a little too hard to determine that as of right now, but it's not exactly the place where I'd be jumping for joy going long. This is where I would have already covered some of the shorts, and if I was long, I would be taking some profits off the table right there. If you take a look at the summation index, we talked about it flipping over right here, and well, we got a continued rally still, okay? I will say that, interestingly enough, the NIMOT actually still has a divergence forming that's right here. So the price action's going higher. This is still weakening internals. So that's kind of interesting. I'll keep continuing to monitor that. But as it stands right now, the summation index is pointing straight up, still below zero. You'd want to see this obviously curl around and then the parabolic star to start upticking it to get a little bit more bearish as it stands. Another thing to call out is the summation index for the NASDAQ. You can see NASDAQ is just kind of going sideways. Could be basing, could be accumulation. We don't really know. It could be flagging, could be just a range. We don't know. Okay, so don't get overly too confident over here. Just keep on paying attention. The summation index is below zero, and it's kind of stuttering out right here. That in today's move, you would think that this would have went higher, so that's a little bit concerning. But we'll continue to monitor it. A couple other good developments to pay attention to are these divergences in the BP charts, right? So now we're back to overextended territory, 73.5 in the BP SPX. You have a negative divergence here. You can see price action of the BP chart is going up. Right? We have a higher high, we have a lower high over here, okay? So that is a negative divergence for BP SPX. The financials keep on continuing to scream. I still think that this is actually going to be an incredible short here in the very near future. It could be actually very, very soon, as we're just kind of within this range here with financials, and we're coming up to the upper area of it. So I've been building into a little bit of a short position, and I look getting more aggressive when the time suggests to. If we take a look at BP NDX, also negative divergence right here. This could break, but as it stands right now, it is a negative divergence. We have a higher high on the BP chart, and we have a lower high right there on the RSI. If you take a look at the technology bullish percent index, also moving itself into this overbought territory, right? We got overbought, we sold off a little bit, and now we're coming back up into that. Is it going to create a negative divergence? I'll be watching to see if that takes place. Consumer discretionary is currently just exploding to the upper side here. It's around 80, right? 80.36. And the last time it was up in this area was where the bear market rally kind of fizzled off, the prior bear market rally from the June bottom. And now we're moving into that overbought condition, and the bullish percent index is reaching into overextended territory there too. So something to watch there. And remember, tech, right? Sorry, not tech, discretionary. As we already pointed out on the zones over here, discretionary, if we take a look at XLY where it was yesterday, boom, right? It was to the downside. Right now where we're at is we're more in the middle of the range as it stands right now. So there could still be some potential upside, but just take note as the downside is growing, right? So it's minus 8% is the downside as of now, which doesn't mean that that's going to happen or probable, but it's just giving us an idea of where we stand within that range, where yesterday it was only minus 1.48%. So clearly a big move overall in those markets. Now, if we take a look at the last one I want to show is the NYSE bullish percent index. So the broad market overall, as we previously stated. Ignore this chart right here. I forgot to change it to NYA. But as you can see here, we do have a negative divergence forming. The lower high and the higher high rise as it stands. And if you remember the NYSE chart, I'll bring it back up. It's right over here on the downside. You can see that it is coming into that extended the trend line, right? So we moved up into these levels. People got excited up in these areas. People got excited, and then they got rejected. So are we going to get rejected? Time will tell, but as it stands right now, people stay on guard. If you're bullish, cool. Make sure you capitalize on some of these profits. Just like if you were bearish all the way down, right? We talked about, on the move down how to take profits and start covering some of your shorts and to be prepared for this. And it's the same thing that goes up to here, right? So if you believe the market's going to head higher, cool. But make sure you lock in some profits along the way and be tactical how you play it. If you want to play intraday, once again, be tactical. One of the things that's been working very well is just using an anchored VWAP. What you do is you anchor it right to that opening candle. Say if you're doing 2 minute, 5 minute, whatever the case is, and wait for price to say maybe come down underneath it and then start U-turning right through it. And then you buy the breakout. It works very well. It worked today. That's all I got for you on today's episode, everybody. Take me to the moon, but be prepared if the rocket runs out of fuel. See you later.